Hey everybody, it's Silver Seeker, and welcome back to the channel. I'm sure you are aware of this, especially if you watch channels like mine about silver stacking and more, that the price of silver is down, quite a bit down. In fact, over the last few weeks, it's lost over $3 an ounce, well north of 10% of its value. I myself, even just a few weeks ago, bought a bunch of silver at spot 25.80, and now as I record this video, spot is sitting at 22.60. So yes, I do wish I would have waited. But the question is, why is the price of silver going down during high inflation? March CPI numbers showed us an inflation rate of 8.5%. I believe most of us know that it's quite a bit higher than that, and I believe next month it is going to be even higher. So why is it going down? So that's what we're going to try and find out today, but we're going to do it by calling local coin shops around the US anonymously. In other words, they aren't going to know that they're talking to a silver YouTuber, and we're going to ask them, why is silver going down while inflation is going up if silver's supposed to be a hedge against inflation? I think it's going to be a lot of fun to hear what they have to say. Hopefully we get some good insight and good input. So let's get on the phone and make those calls. But really quick before we do, if you are new here, do me a favor. Don't forget to go down below and make sure you are subscribed. It really helps the channel out and I appreciate it. Plus, hit that notification bell so you don't miss future videos like this one. All right, let's make some calls. Okay, so we have our first coin shop queued up and ready to call them, but before we do, remember that we will not be revealing the names and locations of the shops, and we will mask their voice. Again, this isn't really to call out coin shops, it's just to get some anonymous information. So let's get them on the phone and see what they have to say. Here we go, coin shop 1, let's call them. Hey, I got a question about silver if you don't mind.
Sure.
What? So with silver why is silver going down when inflation is going up so high right now? I thought, like...
That's a very good question, but I'm not, you kind of missed as far as that goes.
Gotcha. Yeah, I thought
yeah.
that, buying silver was a way to hedge against inflation, but inflation's like sky high, and it seems like the price is going down. I've just bought some at 25.80, and now it's 22.70. And that's like...
Well, you only paid 25.80 for them? Well,
no, when spot was 25.80.
Oh, I see. Yeah. No, I cannot explain that. Yeah, there's just so many factors involved that it's hard to explain.
Gotcha. All right. Well, I appreciate it. I just thought I'd give it a shot and see if you could give me some info. All right. Thank you.
All right. Bye-bye.
Bye-bye. That's a good question, was his initial response. Then he thought I bought silver at 25.80, which I wish. I'm like, no, I bought silver when its spot was 25.80, and goes, oh, yeah. So, all right, well, first coin shop was super nice. That guy seemed like he'd be a lot of fun to talk to, but, he didn't have any information for us, which I have a feeling might be the general consensus as we make these calls. But let's get coin shop number 2 on the phone and see what he has to say, or she. Here we go. Hey, I just got a quick question. I'm hoping you can maybe pick your brain. I know that silver is supposed to be something that we buy to hedge against inflation, but with inflation, inflation's, sky high right now, and yet silver price is going down. And I know you don't control that, but can I just get some insight?
Well, you're looking at what a paper contract. See, the market's based on what paper contracts are trading.
I got
so, like right now, you can buy a paper contract where you don't own anything but a sheet of paper, and it says how many ounces you're controlling at a cheaper price. But if you actually wanted to buy physical silver and have it, it's going to run you probably about $28 and change right now, would be the cheapest silver you can get.
That makes sense. So, like a couple of days ago, well, I guess it was a couple of weeks ago now, I bought some silver when spot was 25.80, and I paid, around $34 an ounce for it. But now... But now I could buy that same silver for 31, so technically it's still lower, though.
Well, yeah. So the price did go down, but the premiums are still there. Today, if you wanted to buy generic silver from me, it would be right at $29 an ounce.
Okay, yeah. So that's around what I paid.
And you can cost average down from, as you keep on buying is the idea to bring your cost average down.
Gotcha. So just keep the cost average low is what you're saying. So buy
exactly.
Gotcha.
Yeah, take advantage of the dips.
Awesome. All right. Hey, thank you so much. That makes me feel better.
Oh, anytime, bud.
All right.
Bye-bye.
Bye-bye. All right, super nice guy. A lot more insight than coin shop number 1. And he kind of said what a lot of people say. One, he talked about cost averaging, which is very important when it comes to stacking silver. I've covered it on this channel before, and I will cover it again in the future since we have a lot more subscribers than I did last time we covered it. He also talked about how there's a separation between the paper and the physical price. And so I hit him back with, look, I just bought silver when it was $25.80 and now it's $22.74 as I record this. So I could buy it cheaper today than I could a couple of weeks ago. And he goes, that's right, but the premiums are staying the same, which means the value of the silver is still, physical silver is still definitely higher. So he had some really good points, but I don't necessarily think that his answer to why I can buy it cheaper today than I could 2 weeks ago when I picked up silver at $25.80, I don't think that really holds a whole lot, because it's not like the premiums, went up $3 to maintain that physical level. The fact is that silver, regardless of whether you were buying a paper contract or you were buying physical silver, it's still cheaper, $3 an ounce roughly, than it was a couple of weeks ago. And he's, proved that exactly by saying, well, today you can buy it for 29, whereas you couldn't have bought it for 29 back when silver was 25.80, almost 26. So very good insight, super nice guy, very awesome. That is a shop I would probably like to deal with, just because he was super informative, knew what he was talking about. But we're going to get a couple more on the phone here again. We're not calling these guys out. We're not revealing names. We're masking the voices. But let's get shop number 3 on the phone and see what they have to say, if they have any more insight for us. Here we go. Hey, I just got a general question about silver,
Sure.
if you don't mind. So a couple of weeks ago, not from you, but a couple of weeks ago, I bought silver when silver spot was $25.80, and now it's $22.80,
Yeah.
so it's dropped $3 an ounce, which that's no one's fault, of course. But my question is, if silver's supposed to be a hedge against inflation, why is it going down when we're seeing inflation so high?
Because the dollar is getting stronger. Are you familiar with Brent Johnson?
I've heard of, but I'm not
Brent.
familiar.
Okay, he has a milkshake theory that would be great for you for if you want more information on it. Brent Johnson, and what it is the dollar is getting stronger relative to all the other currencies. So the yen and the ruble and the euro are crashing in value, but the dollar looks like it's getting stronger, but it's actually the best horse at the glue factory or the cleanest shirt in the laundry. Even though the dollar's getting stronger, it's relative to the fact that everything else is going down. So in reality, the dollar is going down. But what it creates is, as the dollar gets stronger, since oil is denominated in dollars and commodities kind of follow that, then they're able to manipulate the price down. And you can see the manipulation in the price if you look at, like, say, Monday was a holiday, so the markets were closed. And if you look at the graph, you open up like Kitco and you look at the gold and silver graphs, how it sold off while the markets were closed. What investor would sell 8 billion ounces of silver while the market's closed and do it all in 1 minute, and which is going to make the price go super low? No investor would want to get the least amount of money that they can for their paper.
Right.
They sell when the market is open, and they spread their sale out over all day so as not to cause the market to drop. But you can see, slam down 3 times when the market's closed. Somebody is selling, 8 to 10 years worth of production. So that's where you can actually look and see the manipulation. Market closed, 8 billion ounces, all in 1 minute, makes the price go super low. And then the manipulators like JP Morgan and all that, they place bets ahead of time, shorts, that it's going to go to 1850 or 1880 on gold. And they're right, because they hammer the market down when it's closed, and they take advantage of that. And by dumping, 500 to 1 pieces of paper on the market to drive it down.
So
and then they cash in, and they make billions of dollars off of that. And then they turn around and do it again, and they just keep doing it. And the government, the SEC, covers and protects them because they are protecting a strong dollar. The government wants them to do that because it makes the dollar stronger, and then of course it gives them more strength to hammer it down. It's a vicious cycle.
Wow. That is explained well. Holy smokes. How do we how do we win like the little guys? Do we even have a chance?
Yeah, because silver, its all-time high was in 1980. It was $50.
Right.
Okay, you know, a new car. And when in 1980, I could buy a good used car for $600. You know, a good used car today is 6,000. You have to add a zero to it. So if silver was $50 in 1980, well, it should be 500 if it followed all the other commodities like nickel, wheat, zinc, lumber. You know, lumber's up 400, nickel's up 400%, zinc is up. You know, all these. Look at the price of wheat, bread, milk. All these other commodities are up. Some of them 400%, but your food is up 20 to 25%. Gas is up 50 to 100%. But silver's half.
Right.
Silver is half. It's below $25 from its all-time high in 1980. But yet a car, the value of the dollar is, you have to add a zero to just about anything. You know, a pack of cigarettes was, I can remember when a pack of cigarettes was 30 cents. You know, it's $3 now. I can remember when a gallon of gas was 25 cents. So you can see that the dollar has gone down. So what's the cheapest? The number one rule to getting rich is buy what's the cheapest and sell what's the highest. In other words, buy low and sell high.
Right.
Buy what's low and sell what's high.
Gotcha. Huh. Man, well, thank you so. What was the
buddy.
name? What was the name of that thing you told me to read?
Brent Johnson Milk Shake Theory.
Okay, I will. Thank you so much.
All right, buddy.
All right.
Yeah, man.
Bye-bye.
Take care. Bye.
Wow, so that guy had a lot to say. Very interesting phone call. He definitely was excited to tell me what he thought. Now, he brought up that milkshake theory thing, and you guys are free to check that out, but I assure you this was not a sponsored video. I've actually never heard of that up until he told it to me, so we're going to take a look at that probably at some point and read into that as well. But he definitely believed in a heavily manipulated market. He talked about the big banks and the guy who sold silver at $8 billion, or I'm sorry, 8 billion ounces of silver, whatever he said, when the market was closed, forcing the price of silver to go lower. And then you have big banks making hedges, against that silver, or making bets against that silver price. In other words, they are manipulating the market so they can make their billions of dollars. And I think we all believe that the market is manipulated to an extent. Some more than others, of course. I myself, obviously, I believe and talk about all the time on this channel about how I believe, really, at the end of the day, silver should be a fundamental hedge against inflation. It shouldn't be something that you're doing like the big banks are doing to make their bets and to make a whole ton of money. I just put silver aside, for the future. And if I pass away, in the future, and I have a bunch of silver that, I could have used this cash to buy a super fancy car or something, whatever, my kids will enjoy it. And I will be securing a future for them as well, because I really do believe in the value of silver and gold as real money, whereas I don't believe in the value of the fake dollar. And I thought it was really funny. He talked about the dollar getting stronger. It's like the strongest horse at the glue factory. None of these fiat currencies really have any real value. So very interesting phone call. Really excited to talk to that guy. I was actually going to call more shops than just 3, but after listening to him, there's really no need to call anymore. We got some good insight from the 3 that we did. So there we go. Guys, I want to thank you so much for watching again. I hope you enjoyed the video. I hope you enjoyed the phone calls. If you did, do me a favor, like I said earlier, don't forget to go down below and make sure you're subscribed. It really helps me out and I greatly appreciate it. With that being said, we will see you in the next video.